All right, we're live. So my name is Amar. I'm an advisor at Client First Capital, and this is
Kyle, and I'm a tax CPA at Clover Hill CPA.
And today we're going to be talking about the top 3 ways that you can gift to charities and make an impact, especially if you're in the later years of retirement. So one thing before we get started, Kyle and I always have disclosures, right? So this basically says that we haven't taken your accounts or your situation into account. This is just general educational purposes, and we haven't no advice or client relationship is being entered into. Kyle, do you have anything to add to this?
That's good. And yeah, Amar and I do this to reach out to either current clients or potential clients. So if you have any questions, any specific questions, we'd be happy to answer. So feel free to mention something in the comments, and we'll try and reply as fast as we can, or you can reach out to us at our contact info.
Yeah, that's perfect. So let's jump into this, Kyle. So what is we're going to go over the top 3. What is one way that we can give to charities?
So yeah, I think the 2 categories that I look into is cash and non-cash, right? And then there's a couple of different categories that those break into. And the third option would be, QCDs, which is a Qualified Charitable Distribution to reduce your RMDs.
Yeah. So maybe let's just dive into QCDs first, right? So with Qualified Charitable Distributions, when you're 70 and a half or older, I'm just going to talk about the mechanics of it real quick, that we can take those dollars directly from the IRA and give directly to the charity, and that doesn't show up on your taxes, right?
Right. So let's say your required minimum distribution from your IRA this year is $50,000, for example. If you set it up correctly, and there's some admin stuff that you're familiar with, and so you have to, if you wanted to give that $50,000 to charity, for example, it offsets directly to your ordinary income. So otherwise a charitable deduction would be in your itemized deductions on your tax return. So they would kind of offset, capital gains and maybe stuff that at a reduced rate. This guarantees that you get a dollar for dollar benefit at your top tax rate.
Yeah, so it's above the line, right? So it's like this is the best method also because you put pre-tax money into your IRA and you're giving it directly to charities. So the gains, or what would normally be ordinary income, doesn't even show up on your taxes.
Exactly.
One thing that you mentioned that we're dealing with is from an administrative side. We've noticed a couple of the big custodians, when they report the distribution from the IRA, they're not itemizing the portion that have gone directly to charity. So that's one thing to be cognizant of, because Kyle, I'm sure you ask your clients how much of this went directly to charity to figure out how much it would be non-includable, right?
Yeah, and so that's another nice benefit of the Qualified Charitable Distribution from your RMD, is that you don't have to itemize your tax deductions to get benefit to giving to charity. So let's say, for example, your standard deduction for a married couple would be $25,000 about for next year. If you're not going to get $25,000 itemized deductions but still want to get a benefit for giving to charity, this is a perfect way to do it. And also, even my wealthy clients that are guaranteed to itemize, I almost always recommend doing the QCD. It's really just, I think all taxpayers, 9 times out of 10, it makes sense to do that over giving to charity, directly to charity.
Yeah. And so that's probably the best way, right? And so the second best way maybe we should cover is the donor advised fund, right? So here in a donor advised fund, you can take appreciated stock or investments, real estate, business interests, and you can transfer that into an account called a donor advised fund, in which you get the deduction immediately, and then you get to choose over time how to distribute those funds to the charities.
Yeah, so that's been a great tool for a lot of my clients. I highly recommend it. I think they're great. I think a situation where it makes a lot of sense is, if you have a big sale or a big income year for whatever reason, and let's say you give $10,000 to charity on average per year. Well, you could front load those deductions into a single tax year where you get the best tax benefit for the charitable deduction, get the tax deduction in that current year, and give from the donor advised fund over a number of years, which you've already taken the tax deduction before.
Right.
And the best candidate to give to a donor advised fund is appreciated stock or appreciated property. So if you have a big gain on one specific stock, that would be a great candidate to give to the donor advised fund. Avoid the capital gains in selling the stock because you give it directly to the donor advised fund. And your charitable deduction is to the fair market value of the stock. So it's kind of a double tax benefit.
Yeah. So exactly, double tax benefit in the sense that you're not paying the capital gains piece and you got the charitable deduction piece, right?
Right.
And then what is the third best way to give to charities?
Just write a check or direct cash contributions to the charity. I think obviously it's administratively easier. If you give to your church or to some other organization, it's obviously easier sometimes just to write a check. It's less admin on their end, and actually with this year with the new CARES Act provisions, there's some new AGI limitations, which is we can go into. That's another topic we can go into, but sometimes it can make a lot of sense if you're giving a lot to charity. This is a good year to do it. So I've had more cash contributions this year than I probably have in prior years because of that.
Yeah.
But yeah, I would say that's usually the third best, most probably least tax efficient way to give to charity, but obviously it makes sense in a lot of situations. So
yeah,
it happens. So.
And some of the charities, some of the smaller charities, right? They're not, they don't have cash flows of their own that are that large where they have, an opportunity to take a lump sum of money, funded into them. So some of the smaller charities, maybe they do a monthly thing where it's $100 or whatever, and it's easier just to write a check for those. So I guess,
or if you're at an auction or something like that, I mean,
exactly.
Hey, here's 3 here's 3 shares of my Amazon stock for the trip that I just bought.
Exactly.
Just logistically, it's just difficult. So
exactly. So to summarize, right? We started with QCD being the best option, qualified charitable distribution to a charity, because it's above the line, right? Then we have the donor advised fund where you're getting 2 benefits, where you're eliminating the capital gains and you're getting the charitable contribution. And then the third best is just, for some charities, just writing a check or giving cash is the easiest way for that charity to accept the money and also for you to give funds. So that is it. If you have questions or comments for us, please leave them below. I know the summer months have been a little bit of a hiatus for Kyle and I, but hopefully we're back, and we look forward to answering your questions. Thank you.
Sounds good. Thank you again.